Good morning. It's Monday, April 8th, about 6 a.m. Central Time. All right, the precious metals are exploding higher. We've got June gold making a new contract high here, 23.72.5. That's a new all-time high. Then also on the May silver contract, 28.19.5. That's a new contract high. So this comes after Friday's employment data showed a stellar 303,000 jobs created in March. The unemployment rate edged down to 3.8%. And the CRB index, which is your basket of commodities, has your ags, your meats, your metals, your energies, everything into it. It hit its highest level since August of 2022. So the commodity super cycle seems to be underway here right now. So again, gold hitting a new record high. Energy is pushed higher on rising geopolitical worries, but they're taking a small step back here last 2 days. And then also US equities, they snap back after Thursday's massive sell-off. So we're under a little bit of pressure on the equities as well. So is the volatility behind us is the question, because we had that jobs number, and I say no, because Wednesday we have CPI data coming out, and while Wall Street expects the first interest rate cut in June, CPI could show an uptick in inflation because of rising energy costs as well as rising home insurance premiums. So forecasts are for 0.3% month over month and 3.4% year over year. We'll also have University of Michigan sentiment on Friday, and then the minutes from the March FOMC meeting will also be released on Wednesday. There's several different speaking engagements from Fed officials as well. So it is going to be another bit of a volatile week here. Surprisingly, the number of interest rate cuts is starting to continue to come down. Where it was 3, now it looks like they're factoring about 2. We'll have to check out the CME's Fed Watch tool here. We'll look at that tomorrow and see what that's forecasting out as we approach that Wednesday CPI report. So equity indices really remain vulnerable, with resistance in June on the S&P 500 at 52.89. Sorry, 52.89. Been trading too much gold here. While the market looks like it could easily sell down to the 50-day moving average. So throw the 50-day on your S&P 500 chart. That's going to come in right around 51.70. That would be kind of my downside target here. On metals, an interesting report that I read over the weekend was weighing gold, how we watch gold against the US dollar index hitting an all-time high. Well, it also weighs it against 9 popular currencies, things like the euro, the British pound, Swiss franc, etc. And what it shows is that against every single currency, it's starting to make new contract highs and new all-time highs. That phenomenon kind of demonstrates the massive devaluation of currencies regardless of the country. I hear a lot of people say that, the dollar's doomed, the dollar's dead, things like that, okay? It seems like that type of conversation is probably happening in every single country out there if gold is making these new all-time highs. You're sitting there, in an Australian dollar going, hey, gold's making new all-time highs against the Aussie. They're fiscally responsible, blah, blah, blah. So it seems like that same conversation is a global phenomenon here. So, and I really think if this trend continues, you're going to see $2,500 gold. You'll see $35 silver. You'll see $50 silver also, and this should kind of cement itself in stone because you have too many people of different countries that are going after the same asset classes here at the moment. So this week it's going to be interesting to see if we can hold not only the contract high and the all-time high, which we've broken through to the upside, so the path least resistance is up, but I would say Friday's low is kind of your key number there to keep an eye to look on. So something else to watch here, the average true range. So this is risk management discussion here. Average true range on silver, about 80 cents at the moment, 70 to 80 cents. So if you're going to play it, think about it from the risk management standpoint. Go, hey, if you can handle $5,000 or $4,000 swings in a day in your account, then the 5,000 ounce silver is the one you're going to be trading. But if you can only handle, say $1,600 or whatever is what you feel comfortable with, that would be 2 of the mini contracts, 2,000 ounce contracts at the 80-cent swings. And then on the gold market, it's going to be $33. So every 100 ounce contract is swinging about $3,300 a day. So if you can't handle that, say you're comfortable with only $1,000 a day, you might want to do 3 of the 10 ounce contracts. This is just on a risk management standpoint here. And then something else I'm looking at short term, we're seeing crude oil futures kind of look like they can go either way. So a short-term strategy on that, we break out over 88.80. I think we're going to run up to $90. We break down below 83.80. I think we're going to run down to about $80. So we've got kind of these two pocket areas here, both on both sides you're going to want to keep an eye on in the crude oil market. Many of you trade similar products: crude, Bitcoin, silver, gold, copper, platinum, and equity. So that's why I'm kind of weighing out all these. Also on Bitcoin, breaking out to the upside. Real nice chart, up $5,000. That's a 7.63%. So chances are these people are saying, hey, if gold's making new all-time highs against every currency, why not some other currency, Bitcoin, why, which is a measure of energy with limited supply, some of the same characteristics, break out to the upside as well. So those are kind of my food for thoughts here for the day. So again, stay nimble. 80-cent average true range on gold or on silver, $33 move on the gold market. Bitcoin blowing up to the upside, and like I said, downside here on the S&P 500, 5170 is your 50-day, 5289. We close above there. Chances are path of least resistance. You're going to want to get out of probably your shorts. My recommendation here, if you're shorting that market, and look at probably a move going back higher to those all-time highs, and then we'll revisit the short side of the equity. So got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.